Good morning, and thanks so much for tuning into the trade setup. I'm Neeraj Shah. Let's take stock of what the world markets did before we move on. So the US markets will come up on your screen first, and uh, selectively specific stocks, of course, did get impacted majorly. There was a lot of movement in Netflix, for example, in a big way in after trading hours. We saw a fair degree of movement. No, let's stick with the US markets. We saw a fair degree of movement with. A bunch of other names which came out with numbers or otherwise in the session yesterday. Johnson and Johnson double beat. They raised their FY23 outlook. Lockheed Martin double beat as well. Remained on track to achieve the full year guidance. Goldman Sachs beat on EPS, and while there was a miss on revenue. So a lot of news flow out there, but the markets ended very flat. Even the other cues, if you will, which is the 10-year yield or the dollar index, if you will, are just steady as to where they were. So no big changes there. As a result of which, I would reckon that while the SGX Nifty may show whatever it does, and it shows about a 19-point dip, if you will, or 0.11% downtake, it's a flat start that we anticipate for our markets in the session today. So bear that in mind. Um, uh, Selectively specific pockets might do well or not do well. Like I said, so Netflix corrected 12% and the global news flow played, but it recovered as well, which I've missed, of course, but it is there. Stocks 600 hit 14-month highs, but ended quiet. US markets ended quiet. Japanese stocks might have a quiet start today, but they've had the longest rally in a year amidst, what they call the Buffett boost for Japan. The only thing that is very actionable, if you will, is that the natural gas prices have climbed more than 4%, and therefore do watch out for gas-related companies. So what's the trade setup for the day today? Well, yesterday as well, we saw that there was while the sharp weakness was there on Monday, Nifty shifted to a fall-on weakness with the range-bound movement in trade yesterday. And there is caution as per various quant indicators. So therefore, no big global cues, no big results as of now to react to or to come out during the day today. Expect a range bound movement, flattish movement, if you will, very tight range. Indices, though, you have to admit, are exhibiting a bit of resilience. Like, think of it, day before yesterday, Infosys related downtick, and it was contained. Yesterday, there was so much rumor around this capital gains tax, and the moves were contained. So there's a bit of a resilience, you have to admit, that our markets are exhibiting. But is there a case for for near-term upward movement versus a near-term downward movement? I would reckon chances of a near-term downward movement are much higher. So do watch out for that aspect when you're trying to think of initiating any longs on the index per se. That may not be the best idea. Stay stock specific as a theme. Yesterday, two pharmaceuticals and real estate were the two themes that did really well. And pharma is just seeing continuous follow-on action in trade, and therefore remains that one key pocket to watch out for, to my mind. Not too much in terms of results also today, so I'll move straight to stocks to watch. And the first one on my list is ICICI Lombard General Insurance, consolidated Q4 performance. Revenues up. You don't look at revenues and net profit per se, but just simplifying it, revenues up 13%, higher than Bloomberg estimate. Net profit up 40% higher than Bloomberg estimate. It may not mean too much for the stock, but just bringing it out. The factors which matter, the combined ratio, the COR, 104, was largely in line with analyst estimates. The GWP growth, which was circa 7% at 5340 crores, was lower than estimated. That may be a bit of a pickle, but overall the quarter seemed to be okay. Now, there's Morgan Stanley note, Jefferies note. I thought the MK note also covered most things, so I thought therefore highlight that note. It kind of made the sound points that I wanted to convey. So they reiterate a buy. The target price though has been revised to 1400 from 1490 per share. It's been done on account of a higher cost of equity, implying a 525 PE of 27, price to book of 5x. For NMK's view. The point is, the last 2 points that they are making are the more important ones. The altering regulatory landscape, and we've seen remarkable changes out there, hyper-competitive market environment in motor OD, and the 18% stake sale by ICICI Bank are the key overhangs. And while there is some clarity emerging on the regulatory front, I think, I mean, and competitive intensity, I think will only intensify, if you will. So I don't know about an improvement, but I think clarity on stake sale by ICICI Bank are the next positive triggers. If anything, I would read it this way, that the stake sale by ICICI Bank remains a key overhang, and therefore, no matter how good you may think the results are, a substantial upside on ICICI Lombard might be restricted because of this overhang around stake sale from ICICI Bank. I thought the con call as well, the management sounded a bit cautious from what I gathered. So be mindful, ICICI Lombard may not exactly have a gung-ho date, despite the results on the reported basis as per Bloomberg estimates looking like above estimates. Uh, be mindful of that. The other thing, viewers, before we move to the next stock, is that ICICI Lombard, apparently, as per a Morgan Stanley note, has given clarity around the pricing, and I think that's what Morgan Stanley seems to be suggesting. So they are saying ICICI Lombard management noted that the new guidelines provide flexibility to insurers in designing commissions and rewards to customers. This reinforces a stated view that there is unlikely to be a material change in pricing of direct policies, and this should help settle the recent debate over the impact on policy bazaar, that is PB Fintech. Now remember, PB Fintech as a stock has come off because there was a lot of talk around what is it that could happen to the commission income of some of these platforms, or well, PB Fintech is virtually the only platform, if you will, noteworthy. Um, Morgan Stanley believes that this should help get the clarity and therefore could be construed as a positive for PB Fintech. Do watch out for that stock. I honestly don't have a handle on how big a positive could this be for PB Fintech as of now. We'll try and study this, of course, and put out a story on BQ Prime. But until then, all I urge you to do is maybe try and gather some clarity and watch out for PB Fintech. If it reacts positively, at least you know why it's doing that. And then CRISIL, the numbers looked better than estimated. Revenues up 20%. The estimates were 677, 714. Again, if you look at the EBITDA margin, 28.46. The estimates were 21.8. And therefore, the net profit at 145 versus estimates of 103. Just the fact that it's an illiquid stock and therefore may not necessarily be the most trader-friendly stock, but CRISIL could well react positively today. So do watch out for that one. Tata Coffee, ho-hum, if anything, the EBITDA margin performance was a bit disappointing. Revenues up 10%, EBITDA margin though down at 14.6 versus 16.9. And net profit though still up 19%, must have been an extraordinary. May not react positively. Just keep in mind though, CCL products doesn't get impacted in the same fashion as Tata Coffee if the reasons for Tata Coffee getting impacted are higher inventory costs. CCL has no bearing on what coffee prices do. So even if coffee prices were to move higher, CCL products doesn't get impacted. So bear that in mind. If you want some more insights on this, watch our show Insight, where we've spoken to CCL management along with Nirmal Bang Securities. But yeah, just thought, usually there's a collateral damage or a collateral benefit to CCL products as a result of what happens to coffee prices or Tata Coffee. Very materially different businesses, so be mindful of that. BEML could be in focus. This was discussed yesterday as well, that BEML land assets will start trading today after demerger from BEML. This paves the way in some people's minds for the eventual privatization of BEML as well, or divestment of BEML. Well, maybe BEML does react in the session, so be mindful of that. Now, Bharat Forge and Ramakrishna Forgings become important. JB Hunt, it's a US firm. The first quarter results suggested that the company was facing demand challenges. In fact, the CEO or the president of the company said so, that we are in a challenging freight environment where there is deflationary price pressure for an industry that continues to face inflationary cost pressures. Simply stated, we are in a freight recession. Now, if indeed this is the case, then I wonder if trucking demand per se in the US might become weak, and therefore could it impact Bharat Forge and Ramakrishna Forgings? I think it's a point to ponder over. Do watch out for these two names in the session today if there is a bit of a reaction. Or over the next few days, there may not be an immediate reaction. People might want to study, and forging companies have come and said that European demand is actually extremely strong because of replacement. So don't quite know about that impact, but that could be a positive. But be mindful that this is JB Hunt, and if they are saying that there is an issue with regards to demand and freight, then maybe there could be an issue. Now, there could be an issue for logistic companies, could be an issue for forging companies. Worth looking into. Be mindful of this. Then some trading recommendations. MK has come out with a note on PI Industries. They're saying, I mean, the stock increased by 3.8% yesterday, gained for the second consecutive day. It breached its 200-day moving average, which was of 3.69. It's already trading above the 20-day EMA. It's risen by 3.25% versus 0.21% decrease seen in the Nifty in the past 5 days. So the bit of an outperformance, even on a relative basis. And the increasing RSI and a positive MACD indicate that the long trade can be initiated with a target of 3,300 and a stop loss of 3041. For all those of you who are trading, crazy people, maybe this is a recommendation, maybe this is an idea. It's from MK Alternative Research, so be mindful of that. All credit should go to them if the trade works. I'm just bringing it out for you. Last but not the least, before we wrap up, what I thought was interesting was this note from Sonal Verma of Nomura on inflationary pressures in India. She says, or Nomura says, that they expect an extended policy pause from the Reserve Bank of India, followed by an easing cycle to start from this October itself. Uh, they see lower momentum and base effect at play for April inflation based on daily price data from 1st to 17th April, which means it's very, very recent now. Their provisional estimates suggest that April CPI could actually be below 5% versus 5.7% in March. Core CPI inflation at 5% versus 5.7%, led by base effects and momentum. And the base effects alone should lower the April headline inflation by about 0.7 percentage points. So Nomura has done some serious work on this, clearly suggests that inflationary pressures are on the decline, despite all the conversation around milk inflation, cereal inflation, etc. If anything, the Nomura's note suggests that cereal inflation too is tracking lower. And we spoke to RG Chandramohan of Hatson Agro yesterday, who spoke about how milk inflation is not a worry. It has peaked and will start coming off from June. And he explained the fundamental reasons behind that as well. For all of you who are worried about milk inflation, I suggest you go and hear that interview. It'll calm your nerves for sure. So, well, there's some positives out there when it comes to Indian inflationary pressures and maybe possible Reserve Bank action too. So be mindful of that. But yeah, specific pockets, a tighten because of the lower commissions or PB fintech. Who knows? Uh, possible clarification by ICICI Lombard induced positive move there, or the forging companies, who knows, a negative move, or Bharat Forge, as I said, Bharat Forge and Ramakrishna Forgings, or a CRISIL because of results could be in focus too. So these are a few names that you should watch out for in an otherwise flattish market, but one which quant indicators indicate could have some weakness in the near term. So be mindful of that. Thanks so much for tuning into the Trade Setup. Have a great Wednesday.